Crypto's about to get hit with its biggest tidal wave of cash in its history. Wall Street is unleashing its new secret weapon, index ETFs that will literally flood this market with billions and billions of dollars. It'll rewrite every rule and shatter the old 4-year cycle for good. This is a once-in-a-lifetime transfer of power, capital, and opportunity from the old guard to anyone early enough to catch what's coming. If you think you know how this market works, guys, well, you better buckle up. The insiders are moving, the rules are changing, and the biggest winners will be those who see the shift before everyone else. Today, I bring you 2 top Wall Street insiders who sit at the center of Wall Street and crypto. Matt Hougan, Chief Investment Officer at Bitwise, and he's guiding over $12 billion across the world's most powerful suite of crypto index funds and ETFs. He's spent his career building the bridges between Wall Street and Web3. And, of course, James Seyffart, the ETF Oracle at Bloomberg Intelligence, trusted by Wall Street's pros and crypto natives alike for his razor-sharp read on the intersection of traditional finance and digital assets. He's the guy Wall Street calls when they need a real story. Here's what they're seeing.
These Bitcoin ETFs are the best launch of all time. Like, nothing else is even remotely close.
Crazy, right? Since the ETFs launched last January, spot Bitcoin funds have vacuumed up more than $50 billion, with single-day billion-dollar spikes along the way. Flows like that bend the chart and break the mind. Now, keep Ethereum on your radar. The squeeze is building and it's becoming even tighter.
By our estimate, demand from ETFs and corporations have exceeded new ETH supply by 32 to 1 since May 15th. 32 to 1, more than Bitcoin.
32 to 1. Every new Ether that appears already has a long line of buyers, and they're locking it into ETFs, corporate treasuries, and staking wallets the moment it clears. When supply gets absorbed that fast, advisors start rewriting the playbooks. One of the biggest names in wealth management just laid out exactly how much crypto he thinks belongs in a modern portfolio, and it's gonna blow your mind.
Rick Edelman just wrote a report saying that for some people he would recommend as much as 40% and minimum of 10%, and he's one of the biggest financial advisors in the country.
10 to 40%. That's a lot more than last year's just 1 to 3%. And that's retirement fund money speaking. When mainstream advisors move the goalposts that far, everyone wants to know when the afterburners really kick in. Matt's already circled a year on the calendar. Listen to this.
My money says 2026 is a pretty good year. Could be volatile. There could be pullbacks, of course. But I think we're going to go up in 2026 and break the 4-year cycle.
He's betting that 2026 will finally break the 4-year cycle. And the insane part, we're only at the very start of this record-breaking run.
I think we'll set a new record for flows this year. I think we'll set a new record for flows next year, and so on.
In the next few minutes, I'm going straight to the source with Matt Hougan and James Seyffart, breaking down everything you need to know about what Wall Street is cooking and what this all means for your stack. So guys, without further ado, let's get into it. Okay, James, Matt, welcome back, guys. Good to have both of you back this time together. I couldn't think of a better duo to have on the channel to talk about Wall Street and these ETFs and what's happening over there. I'm far removed. I was over there a couple weeks ago, but quite far removed, and I live inside crypto Twitter. And I know you guys have a bit more touch with Wall Street institutions, and it's your job to understand where we're going and what we're doing. And so for me, this is really exciting because as I make my daily content, I'm often thinking about all these questions in my head, like, I wonder what would happen if XRP and Solana ETF got approved at the same time. Like, what kind of demand would they have, and which one's more? And are they going to have any demand at all? And are institutions do they even understand, further up the risk curve past Ethereum? So I'd like to go over all of those questions today and maybe a little bit more. We'll start off though, Matt, I talked about this in the show today. So you had this like broad market ETF approved, right? Top 10 cryptos, whatever it was. And then it got put on pause right afterwards. Can you tell us a little bit what happened?
Yeah, he giveth and he taketh away. We were very excited for about 37 seconds at Bitwise. It was the highest to lowest. Look, the way the ETF approval process works, and James knows this better than anyone, is that most ETFs are approved at the staff level of the SEC. These are like full-time, lifelong employees of the SEC who do the work to evaluate each ETF and decide if it meets the standards. And they did that, and they said yes, which is great. That was the euphoria moment. But then the SEC has this weird thing where any single commissioner can just sort of raise their hand and say, I think we should pocket veto this and discuss it later as a group. And the commissioners are, of course, the 5 politically appointed leaders of the SEC. And so what happened with our ETF application, which happened before with a somewhat similar product from Grayscale, is that the staff approved it. It was going to turn into an ETF. And then one or more commissioners raised their hands and said, we're going to think about this. I don't know, James, if I missed anything or mischaracterized anything.
No, I think about it the same way Matt does, and I could probably go into a little more detail because he's got to be a little more careful with what he says than what I have to say. So, I mean, I have 2 theories for this. So, first thing I would say is that Grayscale's GDLC had the same decision. They had the same thing happen earlier this month, and it was approved. And then this letter came out saying you're stayed. You can't actually uplist or convert to an ETF, and which was surprising to me because if you read the document, the staff went through there's a lot of detail in there on why they're approving this. So when you think about BitW or GDLC or some of these other products, they're like 90% Bitcoin and ETH, and then it's 10% like 3 or 8 other tokens, right? And if you read the document, like I'll just quote it right here: the sponsor will assure that on an initial and continuing basis at 4 p.m. on every trading day, at least 85% of the portfolio assets will consist of commodities that are the primary investing underlying exchange products, blah, blah, blah. And basically, there's all this stuff in here that basically says, like, you can invest into it, like, into some certain level. And it's basically, they went through the hoops of saying, like, why they're allowing this, because such a small percentage of the assets are in things that the SEC hasn't explicitly approved. But then you get these stay orders. And, like, there's 2 theories here. My initial theory was, maybe they're waiting to actually let these things uplist until they come up with digital assets ETF framework or a generic listing standards for digital assets, which we can get into. So that's the first theory. We can talk about that separately. It's like they're just not ready yet. They're working on something, and then they're going to let these things go. The second theory, which seemed more likely to me until yesterday, basically, was that some commissioner individually. So the first thing is, like, all the commissioners decided, all right, we're going to approve this. This should be approved, but we need to get we want to get rules out the door that coincide with all this. The second one is, like, a commissioner went rogue and basically pulled this filing out and said, I'm not going to let this go. And if somebody did that, that would be Caroline Crenshaw of the commissioners right now. She's rather anti-crypto. So to me, reading the documents, all the work that the staff put into this to say this was allowed, I was like, okay, maybe Crenshaw actually just pulled this out as a last minute, messing with the industry on her way out the door potentially, because she's not going to be a commissioner relatively soon. The fact that they did it again with Bitwise kind of makes me think maybe it is the first thing, but yeah, I don't know. It's one of those 2 things as far as I'm concerned. Either a commissioner went rogue and is just like gumming up the works so these things can't launch just yet, or the commission is waiting for that framework or generic listing standards rules to come out before they let anything new come to market.
So do you think it had anything to do with the fact that there could be a perception that if these 10 assets were traded together in an ETP or ETF, then it would kind of set precedents that maybe the rest of them could be approved?
Maybe.
Yeah, I mean, I think I can't talk about our listing specifically, and the lawyer on my shoulder tells me to tell you that.
Yeah.
But if you think generically, like if you think over the history of how we got to where ETFs are in crypto, they sort of let futures-based ETFs for Bitcoin launch, and then were put into a box where you got spot Bitcoin ETFs. And I do wonder if they don't want to set some sort of precedent. What James mentioned about generic listing standards, the idea there is, in an equity ETF, you don't have to go and ask the SEC for permission to launch an S&P 500 equity ETF. You can just launch it as long as it fits a certain set of rules. And the idea with generic listing standards of crypto would be there a similar set of rules. It has to be so big or so liquid or have only so much insider ownership. And as long as you ticked all those boxes, you could just launch it. One thing that may be happening at the SEC is they want to develop these generic listing standards, and then they would only want ETFs to hold things that fit those standards. And because they're not there yet, maybe that's a generous interpretation, but I choose to be an optimist in life. So that's the frame I'll take.
Okay, well, I'll be rooting for you guys. James, you recently posted on June 30th. I don't know if you want to share your screen, or if not, I can.
You can share your screen. I don't have it up, but go ahead.
I'll put it up. So these are your odds of approval here coming up. And just give me 1 second.
I love this tweet, by the way.
Because it makes you feel optimistic, or somebody else is as optimistic as you guys are at Bitwise. Is that what it is?
That's right. That's exactly right. Yeah, third-party validation.
This is pretty optimistic, and we've got a whole list of things here. But I'm curious, like what leads you to come to these kind of conclusions? 90% versus 95, for example, because some of them, maybe it doesn't. I don't know. Does it have anything to do with how decentralized they are, or not, or does it have to do with volume, or what? Or
yeah. So first thing I'll say is this is a very much a like qualitative and subjective analysis of odds. Like there's not a lot of quantitative analysis that's going into like what are the odds this thing is going to get into an ETF in 2025. A lot of it comes down to like my boss Eric Balchunas and I arguing back and forth about whether or not we think it's going to get approved, and then like at what level would you make a bet that it's not going to get approved or get approved, and we kind of settle on like those odds. That's kind of how we get to these things. But there's a whole bunch of things that go into it, and one of them is like we're trying to right now figure out what the framework could be. Right? Like what could they possibly be looking for that's just going to allow these things to list? And one of them, the one that I've been writing about for months, even before there was talk of the SEC coming up with generic listing standards, was does it have a futures market? Because as Matt just mentioned before, part of the reason we have spot market is because we had futures ETFs, and that kind of pigeonholed the SEC. So if these things have CFTC regulated, CME listed futures markets, I think there's probably going to be an ETF on it, because I don't know how you're going to say you can have a derivative and not a spot product on something that's already been approved by the CFTC. Right. So maybe they say you need to have, the futures have to existed for a certain amount of time. They need to have a certain level of open interest or volume or any of those things. Maybe the underlying asset needs to be over a certain market cap. And one thing that Matt did mention is like the circulating supply versus like concentrated ownership. That would put at risk like a couple of things in my mind, namely SWI and XRP. So like, those things maybe, but again, XRP already has a futures market. So that's part of the reason why SWI is a little bit lower odds for us right now. So those are all things that we're looking at. But for the most part, we think all of these are going to fit whatever generic listing standards the SEC comes up with. And our expectation is we'll probably see some back and forth between the SEC and the exchanges and issuers like Matt's Bitwise over the coming months about what those should look like. We just don't know exactly. So I wrote a note basically trying to guess like what could something be involved, and I just rattled off a whole bunch of them. So we think almost all of these that have been filed are going to be approved. And the only thing that's different from that tweet is that the Pengu ETF was actually acknowledged by the SEC, but that really doesn't change much in my book, maybe a little bit. I think it's going to be a little more than 50% odds that it get approved, but it might not get approved this year. The final deadline isn't until, as you can see at the bottom in that one column, it's March of 2026. So the odds that the SEC comes up with these listing standards, I think, goes early in all these 19B4s. Maybe, I don't know. We'll see. But for the most part, we're pretty confident that these things are going to get approved.
Matt, on this list here, Bitwise is only 1, 2, 3, and then the basket, right? So, but you guys just chose 3 out of all of these to actually file for. Have you gone into any more since then? And also, why just these 3 and not the rest of them?
Yeah, we're thinking about a few more, but our view is to be selective rather than to cover everything. We're looking for assets that have sort of a reason for existing in the world and potential use cases, and then also a strong community behind them. Importantly, not everyone has to love the asset. We've certainly filed for ETFs on assets that many people hate. That you actually don't care about that as an ETF provider. What you care about is whether the asset itself is sound, it does what it says it does, and whether there's a passionate community that's interested, engaged, and excited to buy it. And if those two things are true, I think you have a great prospect. So if you look at something that we filed for, whether it's Solana or XRP or Dogecoin, they fit all of those characteristics. I'm not sure Litecoin fits those characteristics. Maybe other people disagree. That's why we've seen 3 people file for that. But you haven't seen us file for Litecoin for those sorts of reasons. So we're going to be selective. You're going to see us file for more single asset ETPs, but we're not going to do everything because we're not sure everything will be successful or needs an ETF attached to it.
You said that you look for use cases, community, things like that, which is something that us in the crypto community also kind of put in our due diligence checkbox. How tuned in to crypto Twitter and like the cryptoverse is Wall Street and the clients that you speak with? Like, do they know that, crypto Twitter absolutely loves Solana and that XRP is super polarizing, or are they kind of getting a fresh look at these assets, making their own assumptions about the risk, the appetite? Because, obviously there's a huge appetite for Solana in our crypto Twitter community, but from outside looking in on Wall Street, like Ethereum already seems pretty high up the risk curve. So how's that connection or disconnection from the world I live in versus your guys' world?
Yeah,
and I know you guys bounce back and forth between both, but that's the two worlds
for sure. The level of understanding really falls off after Bitcoin and ETH, I would say.
Yeah.
It is the case that there are many TradFi investors that are crypto curious. So if you go to a large financial advisory firm with 100 people at it, you're going to find someone who's a complete degen, and they can go toe to toe with you on any asset in crypto, and they're on crypto Twitter all the time, and you probably even know them. They're probably an anon that you don't know, but they're behind the scenes. They're a financial advisor managing a few $1 billion. So those people do exist. But if you talk the rank and file, the average advisor, the average family office, the average person on a pension board, they vaguely know what Bitcoin and ETH are. And then it drops way off beyond that. At least that's my understanding. I don't know if James disagrees.
I mean, I fully agree. I mean, I see it within my own company. There's like people on all ends, like full degen, like Matt said, and then also like literally vehemently anti the entire space. So like, and then obviously there's plenty of people in the middle that, there's varying levels to it. I would say for the most part, what Matt said is correct. I mean, it's Bitcoin, and then there's a decent drop off to Ethereum.
Mm-hmm.
And then there's like a massive drop off to everything else. I would say I'm hearing more and more people taking Solana seriously from a tokenization side of things, more so than any other assets aside from those first two I mentioned. So yeah, tokenization is a lot of like TradFi. Anything that's the TradFi DeFi overlap, I'm hearing more in the institutional side. But yeah, it's really the first two. And the one thing I would add here is like we see that in the demand for these ETFs that have launched. I think the basket products, like the ones we were just talking about, are going to be there's going to be a lot of demand for them, because as Matt was talking about those advisors he's going to visit, they're used to buying the S&P 500, the NASDAQ 100, diversified exposure. They might want, a 5% allocation to crypto, but they're like, I can't put 5% just in one of these assets. I think there's going to be a lot of advisors that are going to lean in and be like, okay, I'm just going to buy this index product. Even if it's only 10% these other coins, that's what I'm going to do because I like diversification. I think for that reason, these index type products are going to be, I don't think they'll quite get to the size of the Bitcoin ETFs. Maybe I'm wrong, but I do think they will likely be bigger than even the Ethereum products are today, which are over $10 billion.
Wow.
Yeah, I agree with that. I think they're going to be the second biggest category. If you think most of the flows into ETFs are from TradFi investors, which over time will be true, I think a lot of them are just going to, buy the index the same way they do in stocks and bonds. So I think they'll be, very significant. And I think they'll be, after Bitcoin, the second biggest category in crypto. That's why we're so excited to bring them to market.
Yeah. So I'm really curious. My perspective on XRP, the token, changed when I moved back to America, which was 3 months ago. It just seems like if I speak to somebody who's just getting in crypto, or people who don't even understand it at all, they love XRP, right? And they think XRP is going to $30,000, or if if I can buy like 1,000 of them today, and if it goes to Bitcoin's price, then I'm like mega rich. Not like no idea that would need a multi-quadrillion dollar valuation for that to be possible. But it's just got that magic unit bias, right? And like and I met people. It was a couple of years ago, actually, when I look back, I was in New York and I was asking just random people. I'd go to the businesses like, pizza shop or whatever. And hey, you guys have any crypto? Oh, I got some Dogecoin and XRP, or Doge and Shiba really. But like XRP is quite polarizing. Solana has a lot of consensus about, except for like ETH maxis that seem to not like it. I'm curious though to get your guys' opinions based on the people that you talk to and the maybe research that you do. If you had a Solana and XRP approval, both of them on the same day, which one would get more flows?
Oh, great question, James. You go first.
No.
I beat you to
So,
it.
okay. I will say this. We had a kind of a situation like this where we had futures Solana ETFs and leverage futures or derivatives based ETFs that have exposure to Solana launch before the XRP versions. And the XRP versions have got more assets and flows than the Solana version. So, but that said, like the derivatives-based products are nowhere near as high on the list of demand for investors as the spot products would be. We do have a pseudo spot product from Rex Osprey that went through a whole bunch of loopholes and end arounds to try and get exposure to spot Solana with staking. That's also done very well. I think in the near term, I would bet on XRP, but over the long term, I'd probably bet on Sol getting more assets on that side of things, just because, like you kind of mentioned, like anyone I know who doesn't really know this space at all, like couldn't tell you how a blockchain works. They like XRP. They think it's going to be the back-end settlement system for all banks. So yeah, I think there's just a lot of retail out there. If you go on TikTok or any of these other things in social media platforms, they're talking about XRP and Ripple more so than pretty much anything else. So they have like a really good ground game. Go on Reddit. It's the same thing. Like the ground game is unreal. So yeah, I guess I would say that, but I don't know. It's you're completely guessing at that point. But from an institutional point of view, from my experience in talking to people in this space and people just tangentially interested in what's going on, there seems to be a lot more serious people looking at Solana. That's not to say there's no serious people looking at Ripple or XRP, but definitely leans Solana or Ethereum from my point of view.
Yeah, I actually agree. I think XRP would do better out of the gate. I think the average opinion of Solana is better than it is for XRP across crypto investors, but that's not who buys the ETF on day one.
Exactly.
It's the passion, right? And so I went to an XRP conference in Vegas on a Saturday. There were 1,200 people in the room. Every seat was taken. That's crazy. Try to get that in a TradFi conference. No one's going on a Saturday. There is an army of people who are really passionate about XRP, and I think it would do exceptionally well out of the gate. It doesn't matter, again, that 90% of people hate it. What matters is 10% of people love it. That's what drives the flows on those initial days. And I think it would do well. If Solana is ripping, I think Solana is facing somewhat of a narrative transition that it's going through. And so depending on when it launched and where it is in that transition, I think that would matter a lot. If Solana is ripping, it would do well. But my base case out of the gate would be XRP, at least for the first few months.
Most of these ETFs, final deadline is
October-ish.
October, November. So let's say that they're all approved in mid-October. So let's say 12 months later, how much percentage of the total AUM under crypto ETFs is Bitcoin, ETH, and then others?
I'll go first. I think that the demand for these products is going to be dwarfed by the demand, like I said, for the crypto. So if we include crypto index products, I think those will do very well, particularly over the long term. I think the long tail of these assets, they're not going to get anywhere near the level that Bitcoin and ETH ETFs have gotten. The other thing you need to keep in mind is like everyone in crypto like thinks their ETF is going to launch and they're also going to get, $50+ billion of inflows in a year and a half, which is like, you got to take a step back and realize that these Bitcoin ETFs are the best launch of all time. Like nothing else is even remotely close. Right. Ironically enough, the third fastest ETF to I think 10 billion, it was IBIT from BlackRock and Fidelity's FBTC. The third fastest is BlackRock's Ethereum ETF. So people think Ethereum ETFs have done horribly. They're a $10+ billion category. That's extremely successful. I don't think these other products are even going to get as big as Ethereum necessarily over any shorter time period. That said, a lot of these products will launch, and if they can get $80 million or $100 million in AUM, I mean, Matt's an issuer, so he knows a little more about the numbers behind the scenes, but like that's still a profitable business for these issuers to be launching these products. Is there going to be able to be 12 different, I don't know, you name it, Dogecoin ETFs? Probably not in the same way there can be Bitcoin ETFs, but there's probably enough room for one or two or three to operate and to have pretty successful businesses. So I think the long tail, probably not a lot of assets. Like I said, I think it'll go Bitcoin, index products, maybe Ethereum, maybe one of these other ones will upset Ethereum potentially, who knows? And then everything else will be a little bit smaller, but that also depends on the demand and growth of the underlying protocol. So our view is just right now it's mostly Bitcoin, maybe the index products, and then everything else in Ethereum, and then everything else is probably going to be a lot smaller than what we've seen on the Bitcoin side of things.
Yeah, I agree with that. I'd also add, I'm really optimistic on Bitcoin and Ethereum inflows over the next year. So I think they're going to pull down a lot of assets. I think some of these small funds, smaller assets will do well. I wouldn't be shocked if you ended year one with $1 billion in a Solana ETF or $1 billion in it. That's within the realm of possibility. For what it's worth, that would make it like, I don't know, a top 50 ETF launch of all time, right? Crypto is so spoiled by these Bitcoin ETF launches. Most ETF providers are like thrilled if they get to 100 million in year one. That is a gangbuster success. So I think they'll be successful from that perspective, but crypto Twitter will probably be like, where's my $36 billion?
Right. We are very spoiled by the numbers, and I think people actually start to lose like a frame of reference for how large some of these numbers are. It's like when we talk about the big beautiful bill and raising the debt ceiling $5 trillion. Like, do you understand how much money it just goes in through one year and out the other? Or $1 billion, 1,000 million. You know how hard it is to make $1 million and then multiply that by 1,000 and then talk about 63,000, million, like 1,000 million, like crazy.
Crazy.
But Matt, I'm also very, very excited about and bullish on the ETH ETF. You wrote also a really great thread. For anyone who's not following Matt and James, make sure you guys do that. We'll put both of your guys' social links in the description below. But it's interesting what's happening with ETH right now, right? And for me, no offense on this one, Matt, but like when BlackRock steps in and does something, right? And one thing that will kind of strengthen this is like on James's post, BlackRock hasn't actually applied for any of these ETFs yet, right? Mm-hmm. And still hasn't. And I'm not sure. This is another question I want to get to also. And sorry for including them both, but like, do you guys think that BlackRock will step in last minute on either of these or any of these, or are they just kind of not interested in this? And then Matt, I'll let you take that, but also I just want to hear your thoughts on ETH, the supply crunch, and then now kind of the power of what BlackRock has done, filing with the SEC to allow staking for the ETFs.
Yeah. First of all, no offense taken on BlackRock. People always, BlackRock has set up a huge amount of assets. My firm's assets are up like 1,200% since BlackRock entered the market. So, they're a competitor, but I'm glad they're here, right? They're doing the work. They're laying the groundwork. So yeah, I think it's great. And I do think they've turned their focus to ETH. As you mentioned, they filed for staking. And I think I wouldn't be shocked if behind the scenes, their sales team got a kick to get ETH into gear. I think that sort of thing definitely can happen. But yeah, as I wrote in that tweet thread, ETH has been on a tear, up 160% since its April lows. Right now, it's talking about getting to $4,000, maybe taking out its all-time highs. And I tried to explain what was happening, and I made the analogy straight back to Bitcoin. If you wonder why Bitcoin is up 120% since the ETF launched, it's that ETFs and companies have been buying 5 times the supply of Bitcoin. And Econ 101 says more demand than supply equals higher prices. And what happened in ETH is around May 15th, we turned a switch, right? We had done $2.5 billion in inflows and no corporate purchases from the launch of ETH ETFs in July of 2024 until May 2025. There was no supply and demand were basically even with the amount of being produced. But since then, ETH ETFs have been on a tear. They pulled down $5 billion in inflows. Tom Lee is out there buying ETH. There are other ETH treasury companies. By our estimate, demand from ETFs and corporations have exceeded new ETH supply by 32 to 1 since May 15th. 32 to 1, more than Bitcoin. And people get all tied up about the valuation case for ETH. Is it cash flow driven? Is it store of value? Whatever. Any asset, if you have 32 times the demand than there is supply, the price is going to go up. And that happened. And I'm bullish for ETH because I think it's going to keep happening. I think ETF flows are going to accelerate. I think ETH treasury companies are going to keep buying. And you can try to be smart about it and do your DCF models, or you can see that demand is more than supply and you buy it and hold it. And I'm a simple guy. So that was the point I was making there.
Yeah, I mean, as far as ETH goes, but again, people like to shit on it. And honestly, I have fun doing it on Twitter too. But you got to realize, like, if you look at the ETFs alone, they have been, like I mentioned before, they've been tremendously successful. And particularly since that April low Matt was talking about, they've taken in a ton of money.
Yeah.
So they're doing very well. I mean, ETH, like, maybe it ends up being the institutional chain more so than anything. That's kind of what it looks like right now. Any institution that's building in the space, for the most part, they're doing it on Ethereum. You look at BlackRock, you look at a whole bunch of other Franklin Templeton, you look at everyone, for the most part, they're using Ethereum for that development, or they're using an L2. Robinhood's building on an L2. They're going to build their own L2. I mean, that's where things are leaning right now. And anyone acting like that's worthless is not, they're missing the forest for the trees, I guess is what I would say. That said, I don't think this space is going to be winner take all. So yeah, that's my 2 cents on the Ethereum smart contract side of things.
How about, go ahead, Matt.
Oh, I was just going to add one more thing. I think the other thing with ETH is it stumbled into its narrative. Like, if you think about ETH for the last 2 years, it was ultrasound money, it was digital oil, it was all these things. The community couldn't agree. And in the last 2 months, it's the chain for stablecoins and tokenization. Yeah. And that sells to TradFi. They want exposure to stablecoins and tokenization. They don't care about value. They want exposure to that growth. And ETH has become that, and it's simplified the narrative. And I think that will carry it for, at least another year. I think that's going to be the story on ETH.
What do you guys think about the part of the question about BlackRock coming into any other ETFs?
You want me to go first, Matt?
I definitely do.
So, one, if they do, I hope the SEC won't allow them to launch in the same day as the guys who have been going back and forth with the exchanges and SEC. Like, as Matt can talk about with anyone, like launching a new product, whether it's Bitcoin, the first digital asset, or it's Ethereum, or it's these other coins, Solana, Dogecoin, you name it, XRP. Like, there's a lot of work that goes in from a lawyer's point of view, particularly for a smaller issuer like Bitwise. They're not small, but they're much smaller compared to like BlackRock and Fidelity. And part of the things that you'll hear from a lot of complaints from people, namely Van Eck and some of these other guys have actually written letters. Steve McClurg from Canary, Jan Van Eck from Van Eck, and 21 Shares wrote a letter basically complaining about the fact that the SEC allowed all of these things to launch at once. They basically, my argument would be for Bitcoin, that kind of made sense. Like, they were denying everybody. Everybody had a file, then got denied. Like, it kind of made sense to do it at the same time. I would make the same argument for Ethereum. I don't know if I'd make the same argument for these other ones. I hope that if they do it for the next few of these, that they allow a wave start. I hope this is the end of it. Once they come with generic listing standards, it should be. That said, I don't think if BlackRock wanted to be involved, they probably already would be. And honestly, if things are moving as quickly as I hope, and it looks to be moving, they're just not going to enter the space just yet. That said, if 4 or 5 Solana ETFs come out in 2 months from now, BlackRock would probably be able to get one out within a couple months after that, and they're still BlackRock with their distribution. So that's the way I see it. I haven't seen any indication they're going to file for another asset. They seem to be fine with Bitcoin and Ethereum, but I certainly would not count it out.
Yeah, I think that's right. I agree with that. For what it's worth, it aligns with their strategy in other asset categories, right? They have a gold ETF and a silver ETF, but they don't have a palladium ETF or a platinum ETF, and other issuers provide that. So this top of market strategy is something that's fairly common to BlackRock. $1 billion fund doesn't move the needle for Larry Fink. It definitely gets me making an extra cup of coffee at Bitwise. So we have different numbers of commas that we worry about.
One thing I do think they will do, I think they'll enter the index space, probably, most likely. It may not launch all 7 different altcoin ETFs, but I would be shocked if BlackRock in the next year or two doesn't have an index product. I think we're going to see a proliferation of those products over the coming year or two. Like, yeah, we're going to get all these single asset ones, but people are going to, revenue weight them, and they're going to do all these different things to weight them. They're going to do, digital assets X Bitcoin or X Bitcoin and Ethereum. So you can, that's the kind of stuff that advisors like to toggle around with. They want to control the exposure. So that's where I think things are going.
I want to ask you guys about Vanguard. Have you guys seen this clip? I'll play it for the audience anyway.
Question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we don't, we're not going to change our minds around this unless the asset class changes. Yep. Why? First of all, we don't believe it belongs. Like a Bitcoin ETF belongs in a long-term portfolio. Someone's saving for their retirement. It's a speculative asset.
That's exactly it.
And the funds that we offer invest in asset classes that actually have underlying cash flow. So like we mentioned stocks, you're buying the forward earnings of a company.
That's right.
And that bond, right,
has coupon and principal payment.
Yeah, you're going to pay me back and you're paying me something for lending you the money.
Exactly.
Right. So they both can be valued. And that's for us, we understand why they would rise up in a portfolio and the role they will play, and we can model them. Something like Bitcoin is just too volatile, and it's not a store of value. It hasn't been. And it's very volatile. When stocks got hammered in recent crises,
Okay, you get the point. So I'm curious. One of the things that he said was that they invest in yield-bearing assets, right? And it's easier for them to value them. And so one of the things I talked about recently in a video, I speculated that maybe this is something the ETH ETF that Vanguard might be potentially interested in, especially after they completely blew it on the opportunity for Bitcoin. What do you guys think?
I think that makes sense. If they were logically consistent, they would have to then say, of course, we'll give exposure to Ethereum because it does have cash flow like characteristics. I don't think they'll be logically consistent on this. Look, Vanguard is a company that moves. It's an incredible business. It's done a lot of good for the world, but it moves 5 to 10 years behind the Vanguard of finance, ironically. As an example, which James knows well, you could have played that same clip about ETFs from Vanguard in the early days of ETFs. Vanguard said ETFs are terrible. They encourage short-term trading. People should just buy mutual funds. Now, today, they're one of the largest ETF managers in the world. Vanguard will eventually get to Bitcoin. Look, we've seen everyone convert. Michael Saylor was anti-Bitcoin in 2013. Look at him today. Larry Fink was anti-Bitcoin. Look at him today. Look at Jamie Dimon softening. Vanguard will be the last maybe pawn to fall, but rest assured, we'll laugh at that clip in 5 or 10 years, and they'll have exposure to a wide array of crypto assets.
Vanguard just bought 8% of Strategy.
That's right. That's right.
Yeah, I mean, so that's like something that people love to point out, but like obviously, like they're just an index product, and part of the thing is like they buy whatever is part of the overall market, and MicroStrategy happens to be a decent size of that for the total stock market because the total stock market ETF fund and ETF is over $1 trillion in assets. So even at a small weighting, you're going to get a lot of exposure from Vanguard. The other thing I would add to Matt's, I don't know if so I think they will come around and allow these products on their platform. I don't think they'll ever launch one. I mean, they would make they have and will make the same argument gold ETFs, but they allow investors on their platform to invest in gold. I just think, and now Salim Ramji, who is a former high-ranking person at BlackRock, is now the CEO. So Tim Buckley, that clip you just played, he's no longer there anymore. So there has been a bit of a change, but I wouldn't count on them ever launching one of these products. Maybe they will. I mean, I would have never bet that they would enter the PE space, and they seem to be doing things along those lines because they're operating like an advisory network. So if clients want it, they're going to provide it. So I think ultimately it was a mistake to basically say, end investors using a Vanguard platform, you can't invest in this asset. That's crazy to me. I genuinely believe that was a mistake for them to do. Do I think it was a mistake for them to never launch these products? Absolutely not. It's literally against their ethos and how they view things. Jack Bogle would never have done it. Then again, Jack Bogle also didn't want to launch ETFs, and now they are very close to surpassing BlackRock for ETF AUM here in the US. So they will change their minds, but I don't. Yeah.
I think that's right, but James, don't you think like as tokenized treasury funds go from a few $1 billion to tens, 20s, $50 billion, isn't Vanguard going to have to pay attention to that? And then they're going to be building funds on Ethereum. How are they telling their investors you can't have access to Ethereum if they're building funds on it? I'm really confident that they will be in the next 3 to 5 years. That's the direction the industry is moving in. So I think they're in a bind and they'll have to unwind it, and eventually they will.
When you guys, Matt, specifically for you, and James, you can chime in too if you're speaking to other issuers. When you're educating your clients about crypto, right? So the first was Bitcoin, and now Ethereum. The way that we operate, who have been in the crypto market for a while, we kind of look at previous 4-year cycles and say, okay, well, if we're betting on odds, the odds are and probabilities are that we're going to follow the same kind of rotation we have in every other cycle previously, because until we see otherwise, there's nothing else to really go off of. And so when you start to see Bitcoin dominance dropping down, ETH usually leads the altcoin run, and then we see this, kind of parabolic run led by Ethereum and then other altcoins. Is that the kind of spiel your sales advisors give to your clients about, hey guys, like, well, historically we've seen Bitcoin rotating into ETH right now, so we think that maybe it's a good time to start rotating from Bitcoin to ETH. And do you think that's the kind of conversation that BlackRock's having with their clients right now, or is it just like, hey Bob, we know that you put $10 million in Bitcoin last year. It's done pretty well, right? Well, now we've got ETH and you can get yield from it. So why don't you take another 5 million and put that in ETH right now? Like, how are these conversations kind of being had?
Yeah, it's more the second version, which is just broadening out your exposure in crypto and getting exposure. You have ETH is how we save in crypto. Don't you want exposure to, how we spend in crypto with stable coins and tokenization on ETH? It's more that conversation than sort of chasing the hot ball of money. When you get to these sort of crypto degens, they want to talk about that. And I do think it's something that's happening. I think it's happening in the equity market, where you see the rise of these treasury companies and IPOs doing very well. I think there's like an altcoin cycle within equity crypto. And then I think it's happening in the crypto market. So a few people will raise that, but mostly it's just diversifying your exposure, broadening your exposure, gaining exposure to everything that crypto can offer.
Yeah, my only 2 cents I would say is, actually, first thing I would say I wanted to mention this about Vanguard. I mean, they've taken in over $1 billion per day for the last decade. So like, they're doing just fine without crypto. So like, a lot of people in the crypto space like to point out like, oh, they're going to, have fun staying poor. And it's like, they're doing just fine, guys. And then, the other side of it, I would say, is like, I'm actually in the middle of writing a book with my boss, Eric Balchunas, about like this whole space, and everyone we talk to, for the most part, Matt hinted at this. It kind of only goes one direction. Like, oh, well, I'll allocate like 0.5% of my portfolio, and then it's like everyone we talk to has upped that number over some time period, for the most part. So I don't know. There's probably some limit. I mean, I've talked to some people who have 100% of their assets in digital assets, but I think they're right now, for the most part, the average person doesn't really have exposure to the space, aside from maybe like MicroStrategy and a Vanguard total stock market fund. So yeah.
Do you see most people doing a small allocation? Or I mean, I know that about a year ago, when the ETFs first launched, it was a very conservative discussion. Hey guys, like, why don't you put 0.5%, 1%, kind of get people's toes wet, and then I heard even just not too long ago that, a lot of that kind of suggestion was actually, it was read, and I forget who wrote the report, but it was one of the big ones, like increasing it to 7% or something like that. Is that still kind of what you guys are seeing right now, or?
I'll jump in and say Rick Edelman just wrote a report saying that for some people he would recommend as much as 40% and minimum of 10%, and he's one of the biggest financial advisors in the country. But nice. Matt is more on boots on the ground on this, so I'll let him go first on anything.
Yeah, I loved Rick's report, and certainly my personal portfolio looks more like the aggressive side of that spectrum. Yeah, absolutely. We've been in the market since 2017 at Bitwise, and I would say for the first 6 years, it was maybe 1%. And then for another year, it was 2.5%. And now I'm seeing a lot more 4 and 5%. We see sort of the wins come in from advisors, and I would say the wins today were in the range of 2.5 to 5%, and more biased toward the 5%. And we see national account platforms talking up to 10%. For what it's worth, it makes sense because the volatility of crypto has come down substantially, right? And the risk in this market has come down, the regulatory risk, the custody risk, the trading risk, the legislative risk, that's reflected in lower vol. As vol comes down, allocations go up. And so I think this is just a rational part. I think we're going to end up in the 5 to 10% range for a lot of portfolios.
Yeah, I would say also, if you shout out to Bitwise for a bunch of the surveys they've done over the years, if you go back 5 years, that they were basically like, if you haven't allocated, what are you waiting for? And like the vast majority of it was, one, there's no wrapper that we trust. So no ETF, basically. If there's an ETF, we'd consider it. And then regulatory clarity. A lot of people are concerned the risk, is the government going to ban it? Like that was something, like it was only 5 or 6 years ago where people were talking about that as like a real possibility. And basically what happened in November, I feel like the left tail risk of some of those really extreme scenarios was cut off. And I think that has caused a lot of people to take this more seriously. Now we have the Genius Bill passed on stablecoins. There's a lot of talk about Clarity and the other market structure bill in the Senate. Our analyst down in DC doesn't think that's going to happen this year. But he does think the first half of 2026 might be possible. But all those things were, people were trying Fit 21 and different stuff, and it was like it wasn't going to go anywhere. Everyone knew it wasn't going to go anywhere, and now it's like, oh, there's actually a non-zero chance that this might get done this year. It's unlikely as far as like Bloomberg intelligence is concerned, but it's definitely possible. So I think cutting off that left tail risk has gone a long way towards the volatility that Matt was talking about going down.
Do you think that we're going to follow the typical 4-year crypto cycle? If we're following the normal 4-year cycle, then that means we only have like 4 to 5 months left. But it just seems like we haven't even, it just seems like we're kind of just getting started here with all the stimulus that's coming into the market, with ETH ETFs, other ETFs, crypto becoming, legal in America, and also just Trump's, wild kind of spending spree and money being, created over his term, essentially. Like, what are you guys' thoughts on crypto? And I guess, do we see these ETF inflows drop off? Because Bitcoin really hasn't. It ebbed and flows a little bit when you have like this CME futures carry trade unwind a little bit, and you see a week of outflows or something, but then it picks right back up again. And another thing is, like, if year one you're allocating 1%, and then you get a little more comfortable, and then year two you're allocating 2%. Well, that's the same amount of inflows in year two than you had from year one from the same people. You don't even need to get more people to do that. But if you go from 1 to 3%, now you're doing 3x inflows from the same amount of people, not including anyone else new coming to the market. So what are we going to do? Are we going to accelerate? Are we going to stay flat? Are we seeing a 4-year cycle? This is like my final big question for you guys.
Really, James, you go first.
You want me to go first? I can do that. So I guess as far as the accelerating part, like the big thing, the big people that use ETFs mostly are advisors. Like that, those are probably the number one use case. Obviously, hedge funds use it. Individual and retail use them a lot too. But for the most part, it's advisors and brokers and wealth management platforms, and they control tens of trillions of dollars in the U.S. alone, multiples of that globally, and they're pretty early as far as putting this in client portfolios. I mean, the people who are buying this, the early days are, the independent advisors, the people who went out on their own and have some sort of different back office and compliance rules, and they were able to buy this immediately. But for the most part, if you look at like the UBSs of the world, the JP Morgans, you name it, like they have usually like a 3+ year due diligence process before they allow these things to be bought by the people using their platform. So you need to have a certain level of assets, certain level of liquidity. They want to watch your track record. Now that has been sped up for these assets specifically because, it's a single asset and you can just study the history of the asset for the most part. Also, there's a lot of demand from people saying, why can't I buy this for my clients? But for the most part, when an ETF is launched, it's like no one can buy it, right? Not until we give it an okay. At these big platforms. And then there's some level in the middle where like I refer to as like a yellow light. So you go red light to yellow light where it's like you need a certain level of assets, or the client has to specifically request it from you to put in their portfolio. That's solicited versus unsolicited. But like the green light on it where you're like, you can just recommend it for a client portfolio, like we're talking about 1%, 2, 3%, what have you. Like for the most part, all these platforms, there's very few that are at that level. So once we get to that level and as this whole space matures more and more, I think we could accelerate, honestly, as far as I'm concerned, with demand for these types of products. And I forget the first part of your question.
4-year cycle, is it still intact?
Oh, yeah. So I think I'm somebody that thinks it will be intact, but it's going to be muted. I mean, if you look at it, I think those loops are kind of getting smaller. Like if you think about it like a roller coaster that's going down, I just think the amplitude isn't going to be as much. Like I don't know if we'll see like an 80% pullback. Could we see 50? Maybe something along those lines. I don't know. I won't pretend to be like a fortune teller, but I just think like as these institutions come in, more stable money, stable backing, forced buyers in a way with these treasury companies and different things. I think the amplitude of those cycles is going to go down, and it won't be as like strict like on the money where everything collapses in November or December of like whatever year is coming up. So yeah, I don't think it's completely done just because human nature, liquidity cycles, you name it. But I just think it's getting more and more mature. And these people we're talking about, advisors, institutions, if they're going for like a 3, 4, 5% allocation, if all of a sudden it jumps up to 10% of their portfolio and they're not ready to do that, they're going to sell as it goes up. But the inverse is true too. If it goes from 5% to 2% or 2.5%, they're going to rebalance and end up buying. So I think that possibly will, as vol is coming down, part of the vol coming down is like the upside is going to be a little bit more capped, but I think also the downside should be a little more capped. So yeah, I think it's likely that's still going to go, but less amplitude.
I love it. Well, James and I agree on one thing and disagree on the other. So maybe we'll put a sushi dinner bet on whether the price goes up or down in 2026. I agree that flows are going to accelerate for all the reasons that James said. These national account platforms are just now unlocking. For what it's worth, the due diligence they do is absolutely extraordinary. The most recent package we filled out was 650 pages long and involved multiple on-site visits from their teams. They really do this at a serious level. That's why it takes a long time. The other fact I would add, sad fact for me, but a fun fact for you, is the average Bitwise client allocates after 8 meetings. And if they started doing quarterly meetings when the Bitcoin ETF launched, they finish that run at the end of this year and start allocating in 2026. These people just move slower than crypto retail is used to. And so I think we'll set a new record for flows this year. I think we'll set a new record for flows next year, and so on. On the 4-year cycle, I bet 2026 is an up year. My thesis is that the factors that have driven the 4-year cycle, there are really 3 that people point to. One is the Bitcoin halving, one is interest rates, and one is blowups. Some combination of these things, interest rates and macro conditions. But the halving is half as important every 4 years, just statistically. Interest rates are as liable to go down as they are to go up. They went up aggressively in 2022 and up in 2018. And I think the risk of blowups is dramatically lower now that we have ETFs and regulation. So I think a lot of those negative forces have been tamped down. And at the same time, we have these flows and institutional purchases. So my money says 2026 is a pretty good year. Could be volatile. There could be pullbacks, of course. But I think we're going to go up in 2026 and break the 4-year cycle.
I think the most interesting thing about the halving was that up until recently, the halving was always just a reminder of scarcity of Bitcoin. It never even really mattered because we never outbought the newly minted Bitcoin. So for the first time in history, the halving was no longer just a reminder, but it's actually playing and doing its role right now, where we're actually seeing a deflationary currency, right? So I think that's pretty fascinating. I'll give my thoughts, I guess. I guess it just depends on how vertical we go. Like right now, we're just seeing this long, healthy, sustained, linear type of up and to the right chart, and I think as long as that continues to go, like there's no blow off there because it's just not crazy enough yet. If we get into that around November, December, where retail is just coming back in masses, and and Bitcoin goes from 180 to 500 or something in 2 months, it's probably going to come down because all these short-term buyers are coming in, getting scared and wiped out. But I agree with other things. I don't know. Every time, one of my good friends, him and I had a debate about this on a X Spaces recently, and he said, he was saying every other 4-year cycle before in the bull run, we've always had some excuse of why this time was different, and it never was. But this time does fundamentally feel massively different than prior. So I don't know. I'm not sure what to expect. We'll be watching and seeing what happens.
Yeah, I would say also the thing that I think could, blow this up a little bit more is, what's going with the treasury companies. So that also terrifies me with it's announcement after announcement after announcement on this front. So
do you think
right now the flywheel's spinning up, and I think we could see a flywheel spinning the opposite direction.
I mean, if we thought things were bad with Do Kwon and Terra and Sam Bankman, and then if these things unwind, talk about dropping a nuclear bomb on our industry, that will take a long time for that PTSD to go away. But if it becomes a self-fulfilling prophecy, right, and it just keeps spreading and spreading and spreading and spreading, then I don't know if it ever collapses. Maybe this is the time when it just gets adopted like it's supposed to be, right? And Bitcoin becomes a world reserve currency and everyone lives happily ever after. I vote for that ending. That's what I want to see.
I like that ending too, Kyle.
All right, guys. Thank you so much for coming on. It was amazing because I just asked the questions that I really wanted to know, making these videos every single day. but I don't get everyday access to you guys to learn what's going on over there. I don't live in Wall Street in New York, and really appreciate you guys for taking the time to pop in and educate us.
Thanks for having us. This was a lot of fun.
Yeah, thank you for having me, Kyle. This was great.
See you guys.
See ya.